Good morning, Jags. This is Fahad. Today is Monday, November 30th. Let's get started. Um, Want to keep this discussion a little bit light this morning because there was a little bit of a volatility in the futures overnight session. And so I want to see exactly how the market will react as the day progresses, if we're going to see some increased amount of profit taking and whatnot. But I do want to touch upon just a couple things real quick. So first of all, keep in mind from the sentiment standpoint as to where this market is right now. And this is just one of many indicators that I like to show. Last week in webinar, as many of you may remember, I did provide some color as to I'm starting to see quite a bit of a stretched sentiment all around me. So for example, if you go to the last week's webinar and just open from November 24th, in our overall market discussion right over here, I discussed after a 19.5% rally in Russell just in November, market internals are starting to look a stretch with NIMO approaching plus 80, NAM exposure index back above 100, CBOE put over call ratio at just 0.45, and CNN fear greed index at 88. And this is still not the full list of market internals that I follow, but the message, is basically is what most important. Well, those looking at those CNN fear greed index, that's at 91 now. So that's where we are. And as a result, it becomes very easy for market to then, pay attention to any kind of negative news. And we did get some, for example, the Chinese stocks, particularly BABA and Tencent, were selling off sharply overnight. And we saw some weakness in Asian market emerge because of the new restrictions that were being placed on the semi company SMIC and some others. So just be mindful of where we are in the market from a sentiment standpoint. A little bit of a profit taking or some pause potentially is coming our way. This is not a bearish call in the market. It's simply that we are working with extended overheated internals. So, be selective as to where we want to place the bets. Now, with that said, there was one good news on this stock called Shopify. Shopify CEO over the weekend after Thanksgiving Friday sales, I believe it was on Saturday, he tweeted that Shopify did $2.8 billion in sales in a single day on Friday, which was a record high, and it was well above consensus I saw on the street, somewhere between 2.3 to 2.4 billion, and Shopify CEO said they did 2.8 billion. So this stock has a setup for a technical breakout just on that tweet alone. It is going to slightly gap higher, not much, after closing around 1034. It's trading at 1047 in pre-market, but technically this picture has started to emerge quite a bit as well. There was a clean breakout on Friday through downtrending resistance. So I want to see if this will continue to power higher and make its way to $1,100 per share, which is a natural resistance right now. This is where all the VOP lines go up to. And if it starts to clear than 1100, then we have a crystal clear breakout at that point to new 52-week high. So there could be as much as $50 to $100 to the upside coming in Shopify in short term, depending on how this stock reacts today to that CEO tweet from Friday. So that's one stock. And secondly, Everbridge, our all-time favorite SaaS that has been made top pick twice in the Jaguar quarterly outlooks in the past. This is a technical and a fundamental and the option activity, all three ingredients that we look at that come together. Keep an eye on this stock. We haven't covered this for the last couple months because of lackluster technical price action, but I want to see if this will start to clear this $130 resistance. That's Everbridge, symbol EVBG. If it clears through $130 resistance, close at 126 on Friday, this could be heading back all the way to $140 to $145 range, and maybe as high as starting to maybe retest these $150 range, which has been the topping action for this stock in the earlier part of this year. So watch for a trigger at $130. On Friday, it caught my attention. If you look at the option activity, this is the kind of unusual action that flies under the radar but catches my attention. But somebody stepped in and they bought 300 contracts, so way out of money, February 165 call options, and they paid $2.75 for it. And so this is a modest, about, you want to say $60,000 to $70,000 in bullish bet, way out of money. February 165 call options with a delta of only 0.17. This may seem too far out of money, but a 10 to 20% move in this stock from now until February expiration, and those calls will come back and make a ton of money for this bull. And much of this is residing on this technical picture. And lastly, fundamentally, I will tell you that there was a conference that took place in which Needham came back with very positive comments on November 23rd. And a few bullet points that I can show you. Here's the file from Needham. Management talked about in this meeting that Everbridge platform has seen its Cover Shield modules as an attractive entry point. This Cover Shield module was released not too long ago. It's a brand new platform. But what has happened is that a lot of the deal signings, new deals that they're seeing because of COVID-19 disruptions, are rather small at this time, between 100,000 to 150,000 in annual contract value. But management talked about that they could start to exceed by, to more than $500,000 in active account value or contract value as the fear of COVID-19 starts to increase the total amount of spending that they're seeing in the C-suite platform for G2K awareness. So that's something to watch going forward from here, because the deal sizes could start to go up materially by as much as 300% than what we are seeing right now. Secondly, and this is the big bull case that we have highlighted in this stock multiple times, which is this European Union deal, which is likely coming in 2022. So 2021 is going to be a very important setup for this stock going forward. Remember that this proof of concept was launched in selective countries in Europe already, including Greece, Iceland, Netherlands, Sweden, and Norway. But there's a European mandate in play for the entire population, that there's going to be this alert system that has to be implemented by June of 2022. So a significant amount of spending for that by some of the largest countries, including Germany, France, UK, and such, all has to happen in 2021. And the street expectations for that are actually quite low regarding how big these orders could potentially be for the year 2021. If management at any time starts to talk about these orders coming in, and that could be a major catalyst for this stock for a major breakout. So keep an eye on this. This has been our key bullish theme for this name for quite some time, and now it's potentially coming into play for 2021. All right, that's it from me. Jay.
All right, thanks, Fahad. And just to add something to Everbridge really quickly, yes, the EU mandate has definitely been, a long-term bullish catalyst. And in terms of the United States, one item from Canaccord Genuity's post-earnings note last quarter was that they do note that the company does have a presence in nearly every state, but it has only won the entire notification business in only 5 of them. So there is still plenty of potential here in the United States for them.
Excellent, good to know. And with the deals, with the deal signing, I'm assuming this post-COVID deal signing that they're looking at with the pipeline for CEM going up, that is also in the US. US is very much in play for that as well.
Correct.
Okay, good stuff.
So 3 items on my watch list today. Number 1, NNOX Imaging, ticker NNOX. This was a company we profiled in Weekend Research recently. And in that write-up, we talked about 2 catalysts. One, earnings, which are now out of the way. And then the second was going to be a live demonstration at the RSNA, or the Radiology Society of North America, taking place this week. On Friday, they put out a press release letting everyone know that this live demonstration is going to be taking place at 11:30 a.m. Eastern Time on Thursday. And then after the demonstration, they will be hosting a webinar at 2:30 p.m. Eastern. So put that on your calendar for this week.
Excellent. Quick, this was mentioned in Telegram too. Last week on Friday, I actually showed this a snapshot, but this was a Catalyst Watch speculative trade idea that was discussed in the Weekend Research for those who missed on November 8th. and with the stock at the time at $34 per share. Here we are now at 52. What a fantastic run on this one. Now let's watch how this catalyst works out. Good stuff.
Stock number 2, OLLI's Bargain Outlet, ticker OLLI. The company is going to be reporting earnings later this week on Thursday after the close. I will be providing a preview note on the homepage later today.
Okay, good stuff. This is always a name of interest in Jack clients, so I'm sure many people would like to see what that is. Always get questions. Hey, is there a play in OLLI's going into earnings? So let's see what you have coming up for this one.
Yep.
Looking forward to it.
And then lastly, Montrose Environmental Group, ticker MEG. This was another weekend research play from September 13th. It most certainly had a longer time frame. I know I put in 3+ months in the tracker, so absolutely, definitely a longer term play. Now, for those that do not know, this is a global environmental services company whose platform covers air quality testing, water quality testing, water treatment. B of A is upgrading the stock today to buy from neutral, raising their price target to $40. Essentially, they're taking advantage of the recent weakness in the stock, which was due to a secondary offering. Looking at the note this morning, there isn't too much new information. You know, they talk about the environmental industry as a whole. They talk about future acquisitions for this company, which we talked about in weekend research. Now they're not including any future acquisitions into their estimates yet. But if you go back and look at weekend research, there were 2 specific companies or 2 specific acquisitions that we talked about. One of them called Emerging Compounds Treatment Technologies, which essentially is now Montrose with that is expanding into Europe after a successful demonstration in Australia. Another acquisition was CTEH, or the Center for Toxicology and Environmental Health. Needham called this acquisition a game changer because essentially they're getting a COVID tailwind from this. You know, when they made the acquisition, Montrose was focused on growing its toxicology and environmental capabilities. Well, now you're getting as I said, a tailwind from the COVID-19 pandemic. The only other item from that note, from B of A's note, was they do talk about just incremental tailwinds from a Biden administration. But anyway, I still like the stock long term. My bullish thesis has not changed one bit.
Excellent. Good to hear that. Once again, a reminder to those, this is the bullish write-up from the weekend research published on September 13. This was with a stock at 29 at the time. And if you look subsequently, so the write-up was issued right around here, September 23rd. And the stock subsequently enjoyed a very strong rally, rising to as high as 35. I know several clients that have been asking questions about this too in the chat room because they were positioned for this rally. But recently, this has come down rather on heavy volume and is starting to build a base. So there's a potential second entry over here with this Bank of America upgrade and bullish note now coming in. Let's see if it starts to pop back above 30. A trigger above 30 opens the door for rally back to $34 per share for basically another 12 to 13% to upside. So we'll be watching this closely as well. All right, good stuff, Jay and Chronicle.
Morning. I have a preview of the next Jaguar Media video, which will be a bullish thematic trade idea for a Chinese airliner called China Eastern Airlines, symbol CEA. And the theme we'll be looking at has to do with the travel industry. So although there are no certainties when it comes to the pandemic, I think it's highly probable that the world will return to some semblance of normality by 2022. And judging by how the stocks of a lot of these travel and leisure companies have remained resilient in recent months, despite worsening coronavirus trends outside of China, it tells me that this market is willing to give the companies a free pass regarding everything that's happened this year. And so they're sort of writing off 2020 and pulling forward 2021 and perhaps even 2022 earnings. So basically, whether it's right or wrong, this is how the market is treating they're viewing this pandemic as temporary rather than structural or secular, which is why I think on the U.S. side, stocks like Carnival Cruise, American Airlines, Sabre, and so on, they've been extremely resilient in recent weeks and months. So going into next year, I'm looking for a place where we can find alpha, which is in travel stocks that are going to experience sudden tremendous upside on reopenings and positive vaccine developments. I think the portfolio could stand to have at least one such long position, sort of like, a position that could end up doubling or tripling by the end of 2021. For example, if we look at the charts of, Sabre, Carnival, like these stocks recently went up 40% overnight on vaccine news. So it's like you're either in it or you're not. Like there's no waiting for channel checks when it comes to catching these moves. So on a related note, and coming back to this upcoming Jaguar Media video, I'm choosing to focus my attention on the Asian travel industry. So back on August 31st, during our morning conversation, I brought up some Chinese travel stocks. The first one was Huazhu, HTHT. Second one was Greentree, GHG. And the third one was China Southern Airlines. A couple of those stocks has done well since then. And for this upcoming video, I will be bringing another Chinese travel company called China Eastern Airlines, symbol CEA. Because what I'm noticing from looking at global traffic and travel data is that Chinese air passenger statistics have almost recovered from the pandemic. Fahad, this is going to sound unbelievable, but flight passenger activity at China's major airports are now just 10% below 2019 levels through October. And if we specifically look at flights from Shanghai's international airport, flight passenger activity at Shanghai is only 2% down through November 10th. And that's despite Golden Week already being over. And then separately, I have this table from on the left from the International Air Transport Association. We can see that as of Q3, Chinese airports made up 5 of the top 6 positions globally in terms of activity versus just 2 in the previous year. And as a result, the IATA is now forecasting that domestic air travel market in China will return to quarterly profitability by year end. And then if we look at some of the Q3 earnings management commentary from hotel companies, like for example, the CEO of Hyatt said that occupancies in most areas of Greater China have reached pre-COVID levels, and the rebound in domestic travel has fully replaced inbound travelers. Very positive there. Meanwhile, Marriott's management said in their conference call that over 90% of their hotels in Greater China now have positive gross operating profit. And they said that the main driver is because traveling abroad is being restricted. And so that's been driving domestic leisure travel meaningfully higher. And lastly, looking at Hilton's latest conference call, they pretty much confirmed that as well, that China is leading the recovery in their business. Now, the thing about both China Southern Airlines and China Eastern Airlines is that they are very much domestically focused, with local flights representing nearly 70% of their revenue. And if we're talking internationally, most of their international flights are within Asia Pacific, which as a region has been coping with the pandemic better than North America and Europe. And so international revenue for these Chinese airlines is not truly global, if you get what I mean. Also, don't forget, we have the Lunar New Year celebrations coming up early next year. People didn't get to celebrate that much this year because of the January and February lockdowns across China. So there's some pent-up demand to travel for that as well. Technically speaking, if we look at the annotated weekly chart that I shared of CEA, the stock has already been testing key resistance once, and currently it's making a second attempt on somewhat rising volume. Also, the stock does have a history of making fast moves to the upside during recoveries, and once again, if and when it makes those sorts of moves, it's like you're either in it or you're not. So that's my Jaguar Media preview.
Okay, fantastic stuff there. Lots of points here already covered, so I hope you in the actual video presentation, there will be far more important coverage there as well. You know what, from a technical standpoint, I agree that this thing can pop and run significantly, especially with the traffic now down only 10% on a year-over-year basis, and airports like Shanghai down only 3%. So pretty much they're back to black already. And this has been a main factor with the domestic travel coming back sharply. You know, my dad lives in China, so I talk to him all the time, and he tells me a lot about it as well, with as much travel as he does. So this all confirms the view that I have been actually hearing people that run businesses there. If it starts to clear through $24 resistance, there's a gap that remains to be filled all the way up to 27 in short term, which was left behind in January. So there's as much as 10% upside coming to fill that gap. But just like your chart, on my charts too, on the long term, there could be a beginning phase of a long journey ahead. Who knows? This could take it all the way high to mid 30s or even 40s, which goes back to the point that these stocks are so depressed that if travel comes back and COVID goes away, there could be as much as 50 to 100% upside coming in these names over the course of next 1 to 2 years. All right. Looking forward to that, doing the presentation in full detail. That's it from us, folks. We will see you in the chat room shortly.